How's it going, everybody? KCG Trades here, and getting right into this week's video. We are in a very weird time in the market right now. Over the past few days, we're finally seeing the overall market pull back. The mega caps have been leading the market, literally pulling the whole market upwards, while the rest of the names, small caps, mid caps, have been very much lagging the market. And now that we're seeing the mega caps kind of pull back a bit, we're seeing the whole market kind of take a tumble. We're seeing it in the overall indexes, where we're seeing a pretty hefty pullback, but we've been seeing this in mid caps and small caps for quite some time now, and we were just talking about it recently in the disconnect in the markets, and how weird it's been that the mega caps have been just leading the market higher and higher. So it's good to see that the market's pulling back. You know, corrections are always shaky when you're part of it, but looking back at it, they're always healthy and they're always necessary, because that's when opportunity arises. But with all the bearishness going on, with the fear that's going on, I'm not that bearish. Like, I do believe we may be in for some more red, some more, downwards momentum, just to shake out all the weak holders. But I do believe we are still in the confirmed uptrend. I do believe we are still going to go higher the rest of the summer. And the main reason for that is because of the charts, basically what I was looking for, the charts, but also the overall market itself and the fear and greed index, NYMO and AMO. I took a look at everything, and I truly believe that we are near the bottom. As weird as it sounds, because the Nasdaq, if you take a look at my screen, we're nowhere near correction. We're just hitting the 21 EMA. We haven't even retested this level yet, this breakout level. It's possible that we do so, but I don't know if we really will. Same with the S&P. We're still above the 21 EMA. So with all the fear that's going on, it does seem worse that it does seem worse than it really is. But overall, the markets are still strong, and it's just pulling back. So let's see how it goes in the next coming weeks. But I'll show you what I mean by why I'm not that bearish. First off, I do want to say that I'm not going to fight the market. If the market ends up turning into a correction and we get a deeper correction than what I'm thinking, then I'm going to completely be out the market. I'm not going to fight it. I'm not in the prediction business. Like I always say, I'm in the analyzing business. So whatever the market tells me, I'm going to move forward from there. Whatever the market shows me, I'm going to react based off that. And right now, I'm just giving you my thoughts and my analysis on what I'm seeing. But yeah, in terms of why I'm not that bearish, if we just take a look here, we take a look at the fear and greed index. For one, we are in extreme fear. All right, 23, that's a very, very low rating, extreme fear. So the whole market is operating on fear. And when that's the case, it's usually a good opportunity to buy. Usually when markets are in all-time highs, we're operating in greed, extreme greed. So the fact that when we're extreme fear and we're very close to all-time highs is very... it's tricky, it is very tricky. If we also take a look at the put and call options, it does say this is still amongst the highest levels of put buying seen during the last 2 years, indicating extreme fear on the part of investors. That's another thing. Stock market breadth, approximately 13.54% more of each day's volume has been traded in declining issues than in advancing issues, pushing the indicator towards the lower end of its range for the last 2 years. And fear and greed over time. See where we are now, the lowest it's been since mid-2020, and obviously not March 2020 COVID levels. But we are in extreme fear territory, which means that we could be due for a bounce soon. If we take a look at NYMO, which is the New York Stock Exchange Oscillator, if we take a look here, we're very, very low. We're at the negative 62 zone. Anything under 40 is usually time for a bounce. So the fact that we're at negative 62 could be due for a bounce soon. The last time it was this low was in the May, this year in May. If we take a look at the market here, May was around here, and we got a nice bounce from there. So yeah, we're actually approaching those levels soon. So like I said, I wouldn't be surprised if we get a bounce. NAMO, which is the same thing, just for the Nasdaq. We take a look here. We are in the negative 66 levels. So this is the lowest it's been since March of 2021. Take a look at March. This is when we had that scare, that low below the 50-day. We had a huge bounce moving forward and continued into all-time highs in the next few months. So all this put together makes me really think that we are due for a bounce soon. It is good that the markets are pulling back, the overall markets with the Nasdaq and the S&P. If we take a look at the Nasdaq, like I said, we're only above the 21 EMA here. We may be due for one more shakeout to retest the breakout levels. The S&P as well, we're still above the 21 EMA. Maybe we get a drop to these levels near the 50-day to retest these breakout levels, but I wouldn't be surprised if we do get a bounce around the 21 EMA. If we take a look at the Dow Jones, same thing here. We're still above the 21 EMA, still near breakout levels actually. It's trading very tight range right now, and the volume has been a little high. S&P volume past few days have been a little high, same with the Nasdaq, but nothing too concerning. We just had a decent pullback. And if we take a look at the mega caps that have been leading the market, like like Amazon, we see here broke out, strong volume, and it's just been pulling back nicely for the past 2 weeks. It's below the 10 EMA, but still above the 21 EMA, and could just be retesting this breakout level. If we do so and bounce from there, there's nothing nothing bearish about that. Just broke out and retesting it. If it does so and reclaims it and bounces up forward, that's very bullish for the stock. If we take a look at Facebook, it is now below the 21 EMA, so it might be retesting the 50 day, but still in a nice uptrend. The volume hasn't been too crazy. For Amazon as well, we had a few high volume days, but nothing too crazy. If we take a look at Apple, still very strong in all-time highs, got rejected by the 150 level, pulling back. Not as much volume as we saw on the Wednesday, still above the 10 EMA, so we may be in for a touch of that. If we take a look at Google, still above the 10 EMA, bounced nicely off the 10 EMA. Microsoft, still above the 10 EMA. And next one is NVDA. NVDA got the big one, big drop, huge volume. It may be due for a pullback to the 50-day, but I do believe their stock is splitting this coming week, so that may be due for the reason for the volatility. But if we take a look at the mega caps that have been leading the market, they're still not breaking down terribly. They're pulling back a little bit, but nothing too concerning. So if we get some more rotation in small caps, mid caps, while maintaining the mega caps, I don't think we're gonna be in for much more downwards momentum. Like I said, we are in oversold territory. We are, possibly due for a bounce based off previous history. Obviously, I could be completely wrong and we could just crash from here, but these are my reasonings for why I'm not that bearish. But the more concerning aspect, like I said, is the small caps to mid caps, starting with the IBD 50. This one is very much breaking down. We got below the 200 day, got above it, and then this past week got rejected by the 10 EMA, broke down heavily, back down below the 200 day, and now below the 200 day. So the IBD 50 growth stocks, they are in bear market territory essentially. And if we take a look at the IWO, which is the Russell 2000 growth ETF, this chart definitely looks better than the IBD 50, but still a lot of work to do. After being rejected by the 314 levels, we pulled back all the way down to the 200-day moving average and had 2 tests of it. A positive sign is we are still above the 200-day moving average. So if we could find a last line of defense to bounce it from here, that would be a very positive sign. This level is definitely one to watch for. If we break down below it, that would be very concerning. But as for now, we are still okay as long as we could get a bounce, maybe get an undercut and rally, but hopefully nothing too terrible where it just completely rips down and then breaks down even further. If we take a look at the IWM, which is just Russell 2000 ETF, we are still in this range here. I would not be surprised if we retest this 211, 210 level, but this is definitely one to watch if we break down below this consolidation, especially because we've been in consolidation primarily all of 2021. If we break down below it, that would be very concerning moving forward. If we take a look at the VIX, which is the volatility index, we got a few spikes up, and we are back above the 50-day moving average, close around the 18. So more volatility could be in play, but it would be nice to see this settle down and move back towards the 17, 16 levels. And if we take a look at the ARKK ETF, ARK Innovation, we take a look here. It did find support off the 50-day moving average 2 days in a row. It's kind of flagging here. So like I said, I'm not terribly bearish, but if we get some bounces, that would be very positive for the market, as well as very bullish after getting a nice little pullback. So it really depends how we act this week. I'm not going to make any predictions. Like I said, I'm not going to make my move before the market tells me what to do. As for now, I'm just going to be sitting on the sidelines and wait for the opportunity to come to me. and see if there's any opportunities I could take advantage of. In terms of my watch list for the week, I don't have a huge list, but there are names I really want to pay attention to, names that are still near all-time highs that are just pulling back slightly, creating handles on low volume above all their moving averages, because those are the names that are probably going to continue to rip forward as the market comes out of this little pullback, if it does. So in terms of my watch list for the week, the first name on my watch list is ASAN. So ASAN has been beast mode as of late, going from the low of 26.29 all the way to the high of 71. So after this huge run up, it's obviously expected for it to go sideways and base a bit. It's already been basing for about 2 weeks. Obviously, that's not a regulated base, so it may need more time if it doesn't decide to continue higher. But what I do like to see, what I would want to see, is a pullback to the 21 EMA. Maybe if we could get a holy grail set up, as we have not got a retest of the 21 EMA since May of 2021. So for about 2 months here, we have not touched the 21 EMA, so that shows really enormous strength in this stock. If we could do so, maybe get a holy grail set up, I'll look to go along from there. But if we continue to just go sideways, then I'll definitely just be waiting for it to base a few more weeks before we could potentially get a new setup. And the next stock I'm watching is CrowdStrike. So CrowdStrike has been one of the strongest stocks out there as of late, and during this little correction that we've been having, it did find support at the 21 EMA, had an inside day on Friday on lower volume, and it has been pulling back on lower volume as well. And we also just retested this breakout high of 249, 250 levels. So it'd be very bullish if we could get a bounce from here, maybe get an undercut and rally back above, because I'm assuming on Monday we might get a little shakeout, maybe a little gap down, just to scare all the weak holders and then move up from there. If we do, I don't know, but I'm really watching to see these levels hold, see the Friday's high get taken off at the 254 level. If we get back above that, I'll be looking to go long in the stock, because we have just recently hit all-time highs and just pulled back for the past week on lower volume. If we could get back above it, that would be very bullish, and I do definitely see CrowdStrike being a very strong stock for the time coming. So that's really what I'm watching for with CrowdStrike. And the next stock I'm watching is DocuSign. So DocuSign, very similar to CrowdStrike, has been on a tear lately. Like we've been mentioning, it's just broke out of this year-long consolidation and is finally just retesting that breakout level here around the 274, which also coincide with the 21 EMA. If we see here, we had a nice candle on Thursday that bounced right off the 21 EMA on strong volume, showing there is some support there. And on Friday, we actually had a bounce above it, gapped up, and closed above the 10 EMA. So this stock is showing great signs of relative strength, showing signs that it wants to continue higher, and it's just waiting for the overall market to basically come out of this little pullback, come out of this little correction, so it could continue higher. So DocuSign is definitely one I'm paying attention to, and I definitely want to see this 21 EMA and this 274 level hold. Maybe we get a retest of it one more time, but if we just continue higher from here, this would be very telling of how strong this stock is. One to definitely watch for once we get out of this little correction phase. So the next stock I'm watching is NET. So another stock that's been showing great signs of accumulation lately, as well as relative strength, is Cloudflare. And very similar to what I've been showing with CrowdStrike and DocuSign, has been showing great signs here, moving up into all-time highs and just pulling back the past 1 to 2 weeks on lower volume. That's exactly what we're getting in Cloudflare right now. We got 2 days that found support after 21 EMA, 2 hammer candles, 1 kind of doji candle, 1 hammer candle. So if we get bounce from here, that would be very bullish. But I also wouldn't be surprised if we get a pullback that retest this breakout level of the 96, 97 level. So either option, I'm open to. Whatever we get, I definitely want to pay attention to this stock because of how strong it's been acting. But this is definitely one to pay attention to because of the low volume pullback that's occurring. I definitely want to get into this stock if it gives me an opportunity to, once this overall market pullback is over. So this is definitely what I'm watching for with Cloudflare. And the next stock I'm watching is ROKU. So ROKU is kind of creating this cup with handle look here. If we take a look here at the cup, and now it's creating a handle, and it retested this double bottom pivot breakout at the 397 level. It has been doing it on lower volume as well, so these are all good signs. If we even take a look here, this handle is starting to create some sort of wedging flag type pattern here. So these are all good signs that that's going on with ROKU. Obviously, growth stocks have been taking a beating as of late, which is why all these stocks are pulling back. But the fact they are doing so on lower volume is all positive signs. So essentially what I'm looking for is if we could hold this pivot level of the 398, 397 level, maybe get a quick undercut and rally, but nothing too severe, where we hold this level, use it as previous resistance hopefully turns into support. If we could do so, bounce from here and continue higher, get above this handle and then retest these all-time highs. We do have a nice little cup and handle here, like I just mentioned. If we take a look at the weekly chart, it does look pretty good for a handle starting to form. It may need one or two more weeks to just create a proper looking handle, but I am very bullish on this stock, especially with all the good things it's doing in its field. So that's really what I'm watching for with ROKU. I really want to see this level get a bounce and see this level hold, which would make me more bullish on this stock. So that's what I'm watching for. And the next stock I'm watching is Visa. So Visa has been on a very strong tear the past week, and as the market was kind of correcting, Visa kind of just continued higher on strong volume. Friday was the only day it kind of pulled back but didn't give much back, and it was also on lower volume than what we saw on Thursday. So these are all good positive signs that we're seeing. There's no real setup as of yet because it is a bit overextended, but I would want to see this stock go sideways for a bit, or even just pull back on lower volume to the 10 EMA, just so the EMAs can catch up to price, so it could settle down, digest its huge gains for a bit, and then we'll see if we can get an alternate entry from here. But this is definitely one to pay attention to because of how strong it's been acting, as the market is kind of in a little pullback correction phase. So that's what I'm watching for with Visa. No real setup, just keeping an eye on it. And the last stock I'm watching for the week is Zscaler ZS. So Zscaler, another cybersecurity stock that's been acting well. After coming out of this double bottom pivot here, it's been acting strong and actually retested all-time highs, but it did it while the overall growth stocks and overall market is kind of pulling back. So for the past week, it has just pulled back, but it has done so on lower volume. And Thursday and Friday, we did find some retests of the 21 EMA, lower volume once again. So I want to see if this level can bounce from here. This level is really what I'm watching for, because if it goes below this, then probably the 50 SMA is in play. But if we could find some strength, find some support, bounce off this level and retest these all-time highs, and then go into all-time highs on strong volume, that would be very bullish for this stock. Similar to what we saw in CrowdStrike, DocuSign, a lot of these growth stocks are finding support off the 21 EMA. So if it could continue to do so, this would be very, very bullish for the growth stocks in general. This really depends on how the overall market does, obviously. But if we do so, these are definitely the stocks that I'm watching for the week. So that pretty much sums up my weekly watch list and stock market outlook video for the week. I hope you guys see why I'm not that bearish on the market right now. Obviously, things can change in a hurry, but I'm going to stay positive. I'm going to stay an overly optimistic person because at the end of the day, we never know what's going to happen. So I'll always like to keep a positive outlook. I hope you guys, take care of yourselves, take care of your money, risk management always first. But other than that, I hope you guys have a great week. Hope you guys kill the markets. Thanks for watching the video. Take care.